Welcome to InvestorWeb, your go-to platform for all things finance and investment. Here, we're all about empowering you with knowledge and insights that can make a real difference. Whether you're a seasoned investor, a budding entrepreneur, or just someone interested in understanding the financial world, we've got you covered. Our channel covers a wide array of topics from investment strategies and financial planning to market trends and economic forecasts. We're committed to delivering content that's insightful, reliable, and above all practical. Our goal? To help you navigate the complex world of finance with confidence and finesse. So, whether you're looking to make your first investment, diversify your portfolio, or simply want to stay informed, you're in the right place. Today we delve into a topic that might surprise you. 10 ways rich people go broke, so stay tuned. First off, overspending. Yes, it's not just a problem for the average Joe, it's a trap that even the wealthiest individuals can fall into. Imagine having a river of money flowing into your life. It's easy to believe that this river will never run dry. So you start living large. You buy luxury cars, mansions, private jets, and more. You host extravagant parties, and you give away money like it's going out of fashion. But here's the thing, even the largest rivers can run dry. And when the money stops flowing, the bills don't, they keep coming. You see, wealth, even vast amounts of it, isn't an unlimited resource. It can and does run out, and when it does, it leaves behind a trail of debt and regret. There are numerous examples of celebrities and tycoons who've lost everything due to overspending. Their stories serve as a stark reminder that no matter how much money you have, you must always live within your means. Remember, wealth isn't an unlimited resource. Secondly, bad investments. This one is a real wealth drainer. Now, we're not saying that every investment must be a jackpot. However, consistently poor investment decisions can lead to financial ruin. It's like pouring your hard-earned money down a drain. You see, the issue often lies in the lack of due diligence and poor risk management. Imagine putting your money into a venture without proper research. It's like going into a maze blindfolded. You wouldn't know what's coming and you can easily get lost. Likewise, not managing risks is like driving without a seatbelt. It might feel adventurous, but one accident and it's game over. So, the key here is to invest wisely. Do your homework, understand the market, the industry, the risks, and the potential returns. And remember, there's no such thing as a sure thing in investments. So don't put all your eggs in one basket. Invest wisely, not hastily. Third on our list is neglecting taxes. A costly oversight indeed. Taxes are like that distant relative at family gatherings. Most of us would rather avoid them, but they're part and parcel of our lives. Ignoring or evading taxes can seem like an easy way to hold on to more of your wealth. But in reality, it's a high-stakes gamble that could cost you everything. The tax man doesn't take kindly to being ignored. Penalties for tax evasion can include hefty fines or worse, jail time. And the cost isn't just financial. Reputations can be irreparably damaged, and the stress can take a severe toll on both you and your loved ones. Remember, knowledge is power. Understanding your tax obligations and planning accordingly is a crucial part of wealth management. After all, it's not just about making money, but also about keeping it. Taxes aren't optional, they're a responsibility. Fourth, lack of diversification. Putting all eggs in one basket is risky. You see, diversification is the cornerstone of any robust investment strategy. It's like a safety net, spreading your wealth across a variety of investment avenues to limit exposure to any single asset or risk. Imagine a wealthy individual who invested heavily in a single company. If that company goes bust, so does their fortune. Now picture another who spread their investments across a range of sectors. If one company fails, they still have other investments to fall back on. The lack of diversification is a perilous path that has led many affluent individuals to financial ruin. It's akin to walking a tightrope without a safety net. The higher you climb, the harder you fall. So the lesson here is clear. Don't gamble your wealth on the success of a single venture. Diversify to protect your wealth. Halfway through our list, at number 5, we have debt accumulation. Now you might be thinking, well, wait a minute, rich people in debt, how does that happen? Well, it's quite simple, really. Even the wealthy can fall into the trap of poor financial management, leading to a spiral of debt. Let's say a rich person buys a mansion, a yacht, and a couple of luxury cars. These are all depreciating assets that continue to drain resources in terms of maintenance and running costs. Add to this the high-interest loans they might have taken out to fund these purchases, and suddenly they're in the red. It's a classic case of living beyond one's means. Then there's the danger of overspending. Without a proper budget in place, even the rich can lose track of their expenses. And before they know it, they're swimming in a sea of debt. Remember, no matter how deep your pockets are, debt can empty them. Debt is a wealth killer. Number 6, fraud and scams. Yes, even the rich fall for these. While it may seem surprising, the affluent are not immune to cunning fraudsters. These tricksters often present intricately woven tales of investment opportunities promising high returns. The allure of quick, easy profits can sometimes be too enticing to resist. However, these seemingly lucrative ventures often turn out to be nothing more than smoke and mirrors, leading to significant financial losses. Ponzi schemes, pyramid schemes, and advance fee frauds are classic examples that have duped even the most astute investors. Additionally, identity theft is another growing concern. Cyber criminals are increasingly sophisticated, using complex techniques to steal personal and financial information. Once in possession of this data, they can cause havoc with your finances. So, how can one protect themselves? It's crucial to conduct thorough research, seek professional advice, and maintain a healthy dose of skepticism. Remember, if it sounds too good to be true, it probably is. Stay vigilant. Not all that glitters is gold. 7th on our list is legal issues. Lawsuits and settlements can drain wealth fast. It's no secret that the courtroom is a battleground where fortunes can be won or lost. A high-profile lawsuit, or even a series of smaller ones, can result in staggering legal fees and sizable settlements. These costs can swiftly deplete even the most abundant coffers. Moreover, legal troubles often have a ripple effect. They can damage reputations, leading to lost business opportunities and dwindling income streams. It's not uncommon to see once prosperous individuals or companies severely impacted by the fallout of legal battles. Furthermore, it's worth noting that even if you are on the winning side of a legal dispute, the cost of litigation can be exorbitant. So it's not just about losing a legal battle, it's about getting involved in one in the first place. In conclusion, legal issues can be a treacherous path leading towards financial ruin. Legal issues can be costly, avoid them. 8th, lack of financial knowledge. Ignorance isn't bliss in finance. Picture this, you've got a ship, a beautiful gleaming yacht, but you don't know how to sail. What happens? You're lost at sea, right? The same applies to finance. Financial illiteracy is like not knowing how to sail your money ship. You may have a treasure trove, but without a good understanding of how to manage it, you're essentially lost at sea. Poor financial literacy can lead to decisions that seem good on the surface, but have disastrous long-term effects. Consider the pitfalls of bad investments, high-interest loans, or even simple budgeting errors. These mistakes can quickly erode wealth and lead to financial ruin. So how can you combat this? Education. Equip yourself with the knowledge to navigate the financial waters. Learn about investments, understand taxes, comprehend the importance of budgeting and saving. Knowledge is power, especially in finance. 9th on our list, economic downturns. Even the rich aren't immune. Economic downturns, recessions, depressions, these are large-scale financial calamities that spare no one, not even the wealthiest among us. A downturn in the economy can negatively impact businesses, investments, and personal wealth, causing even the affluent to go broke. Imagine a billionaire with a significant portion of their wealth tied up in real estate. Now imagine an economic downturn that causes property values to plummet. Suddenly their billions are reduced to mere millions or even less. Or consider a wealthy investor whose portfolio is heavy in stocks. A recession could see share prices tumble and with it their net worth. These scenarios underline the fact that no one is completely safe when the economy takes a hit. It's crucial to have a diversified investment portfolio and a sound financial strategy to weather these storms. Economic downturns can be devastating. Be prepared. Last but not least, family and personal issues. These can take a serious financial toll. We all know life can be unpredictable and throw us curveballs when we least expect it. It's no different for the wealthy. In fact, personal issues like divorce, health problems, or family disputes can severely impact their financial stability. Consider a divorce. It's not just about emotional turmoil. It can also mean splitting assets, paying hefty legal fees, and possibly ongoing alimony. Similarly, health issues can lead to massive medical bills, even with insurance. And then there's the potential loss of income if health problems prevent them from working. Family disputes too can lead to expensive legal battles over wills, trusts, or business shares. And these battles can drain a fortune quicker than one might think. In essence, no amount of wealth is immune to the financial drain caused by personal and family issues. It's a stark reminder to plan and prepare for life's uncertainties. Personal issues can be financially draining. Plan for them. And that wraps up our list of 10 ways rich people go broke. From the pitfalls of overspending to the risks of accumulating debts, we've covered a wide range of financial missteps that can lead to significant losses. Bad investments and lack of diversification have also been highlighted as major contributors to financial downfall. Neglecting taxes, falling prey to frauds and scams, and encountering legal issues can further exacerbate financial instability. Moreover, lack of financial knowledge and the impact of economic downturns can be devastating. Lastly, we cannot overlook the role of family and personal issues in compromising financial security. This discussion underscores the critical importance of financial literacy and prudent financial management. It's not just about making money, it's about preserving and growing that wealth strategically. That's it for today on Investor Web. Don't forget to subscribe for more financial insights. Remember, wealth preservation is as important as wealth creation.